Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Wednesday, June 15th. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used to help make good decisions as a trader, this will be a video for you. First off, a couple of clarification points. Number one, this price over here will still be moving and the candlestick right there will be moving around. That's because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then next, I'll be using the 30-minute time frame. So for your beginners out there, what that means is each one of these candlesticks here, as they're called, represents 30 minutes worth of time. So stock number one here, NIO, very, very impressive day. Got the gap up right there after what had been a very, very nasty downwards move. However, the gap up was just the beginning because after that, the price kept moving and moving. But really the main reason why I'm putting this on the watch list is because, yes, it's a popular stock, but because there's a level, and let me be very clear, I'm not trying to imply this is a secret discovery. I'm not trying to imply this is some sort of special talent. I assure you a lot of people will be recognized in this area. And I say all that because call it a self-fulfilling prophecy, call it whatever you want. When a lot of people are watching the same level and wondering the same thing, it can produce some very dynamic movements. And the level here that I think a lot of people are going to be watching is that general trend line at that area up there at, we'll call it $19.10. I mean, you go through the history of things and you can see was very annoying to the price there. And once again today, very annoying. So while that does not guarantee anything, it does make it valid. It does make it plausible to think that if the price can get up to that area and then break up through it, that break in and of itself could very well create quite a bit of upside buying pressure. So again, if you like to play breakouts, then $19.10 is an area that I think a whole lot of people will be watching. Next one, IMPP. I've been tracking this one quite a bit, and this one certainly does continue to pull back, and things are starting to look shaky, but you can't say that the bears are in full control or anything like that. Now, I realize it can feel that way if you're a day trader and you bought right there and your plan was to buy and sell within 7 seconds. From that point of view, then yeah, the chart really, really feels terrible, but in all actuality, you should no longer be holding. Like, where's your stop loss at? But that's a whole nother discussion. But point here being is, yes, I realize that things have pulled back quite a bit, but the reason why I'm not completely saying that the bulls have lost control is all about that pink line there, which on my chart denotes the famous 200 period moving average, which is still sloping upwards. And as long as the price stays above that level, then again, from assuming you care about the big picture point of view, you still have to give the benefit of the doubt to the bulls. Now, if the price comes down to that area and blasts down through it, at that point, the chart is broken, the bulls have lost control, and the bears have regained control completely. But like I said, to say that the bears are fully back in control right now, that's just a little bit too much given the context that the price is still and has the opportunity to stay above that pink line there. So if you haven't connected those dots moving forward, that pink line is going to be the very important and very key level of support, which is valued at 58 cents. If there is any sort of attempted bounce to the upside, keep a close eye on that purple line there. The 50 period moving average currently valued at 78 cents. But yeah, as of right now, it's all about that 58 cent mark. Next one, RDBX, and rough day on this one as it pulled back, or I should say continued the pullback that showed up on Monday right there. So you had the gap down and then it just continued to head downwards. But same general premise and why I put in the location where I did. Yeah, that's been a very big pullback, but notice where the price is relative to that 200 period moving average pink line. It is still above it. So to go and say that the entire chart's broken, the bears are back in full control, that's just a bit overly dramatic. Previously, like I said, if the price does go down to that level and then break through it, okay, at that point, it becomes a much different situation. But as of now, that's not the case. So you don't want to be too dramatic in your, in kind of your analysis of things. But so as I just said, key level of support, obviously now at this point, all about that pink line, which is valued, let's just call it $8.30. And then like previous stock, and again, why I put it kind of where I did, if there is any sort of bounce, you have that purple line up there, the 50 period moving average, currently valued at 12.20. So who knows, maybe some sort of sideways channel here starts to form between these two moving averages. That all remains to be seen, but those are going to be the two primary levels that, in my opinion, at least matter most. Next one, REV, and wasn't quite sure if I wanted to put this on the watch list, but it is still interesting enough because, to be fair, I mean, right now, in my mind, it feels like, okay, this was a one-day pop. It's it's completely collapsing and back down to oblivion it goes. However, I've also learned that kind of when I feel that way, when I just take things to the extreme of worst-case scenario, then all of a sudden I'm looking back at the same stock and I'm thinking, oh wow, I think I was being a little bit too pessimistic. So, like I said, these are situations where there's no guarantees, and you got to manage risk. But like I said, that becomes very interesting because if this does pull back a bit more and comes back down to, let's call it right around this $1.20 mark, then last time it was down there, it did at least go sideways and then make a big move. Now, does that mean that if it goes down there, it's going to go sideways and then make a big move again? Of course not. However, is it valid? Is it plausible to think that, hey, it's done it before, maybe it could do it again? Yeah, that's certainly a rational thought process to have. But you got to be fair and acknowledge, well, it might not happen, and that's why risk management is so important. So if you like to play these situations where things are looking pretty rough, where it's looking like, okay, probably a lot of people with pessimism out there about the stock, then yeah, you can potentially get some very nice, bounces and reversals. But like I said, definitely higher risk. So you want to make sure that you're going to honor the, your trade plan with stop losses and all those other risk management protocols. Next one, AMC, and this will mean a bit more to those of you that watched the video from yesterday, but talked about that green line there and how it was important and how, yeah, the pattern yesterday wasn't the greatest, but as long as the price stays above that green line, that's a good sign. And right here, talk about a very eventful 30 minutes, because during that opening 30 minutes, that kind of right there, the price actually came down to that green line, broke down below it, and then just like that, snapped upward. So a very powerful move. And then after that, it becomes a question of, okay, well, maybe that was just a quick snap up and it's going to snap right back down. And as you can see here, that was not the case. It never did snap back down. It just slowly and steadily made its way higher and higher and stayed above that green trend line. So pretty much everything that I said in yesterday's video now holds true here. The main level, at least in my opinion, is all about this green trend line here, because in order for the price to stay above that trend line, then that means that the price itself is going to have to continue to build those higher bases. As long as those higher bases are in play, then it's a rational, argument to make that, hey, this thing's bouncing. Hey, it's starting to turn into a reversal. Like nobody could, argue against that as long as the price is putting those higher lows, which is what that green line will help you to see. As far as areas of resistance, if this does continue on up any further, key level to watch very close is going to be right up there around the $12.10 mark. But yeah, all in all, got to give credit where credit's due. It's done a good job of staying above that green line today. Real quickly, just want to take a pause and personally invite you to get signed up for this free live online class that I'm offering later on in the week. So if you've been enjoying what you've seen and you want to learn more about this tool, how it should be used to help build consistency as a trader, then certainly get signed up for this free class. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying what you've watched and want to learn more, certainly get signed up for the free class. Next one, ticker symbol CLVS, and this is one where sort of in the same attitude of, yeah, looking really bad. Now, it doesn't look nearly as bad as REV, but there is still a pretty big pullback. But you got to give the context of it is still within a general bullish context, because it's not like the price has totally crashed. And if there is a bit more panic, a bit more, downwards pressure that shows up, it could take the price down to an area with a whole lot of supports. And the level here that stands out to me as being very interesting is right down here at the 71-cent mark. You can see down at 71 cents, not only is it a gap close location, but you also have the 50-period moving average. You also have the 200-period moving average. I want to continue to reiterate, does that mean that for sure guaranteed that if the price goes down there, it's going to bounce? No, of course not. But does it make it valid? Is that a plausible thought to have, that you could build a trade plan around that price level? Absolutely. So if you like to play these pullbacks, if you like to play this penny stock range, then I definitely keep this one on your watch list. Next one, KAVL, and a beautiful, beautiful setup. Goes back to the talking point of self-fulfilling prophecies, but the level here that I think a lot of people will be watching right there at $2.40. You can see it presented some problems there. And then once again this afternoon. But you got to like the fact that this thing did pull back and then did not continue to crash, right? That didn't happen. There was no crash, but after it pulled back, started to go sideways and then work its way back up, and is now once again knocking on the door of $2.40, which brings up the very valid question of, okay, is this breakout going to happen? And that's the entire idea behind a watch list. Find unique situations, find interesting situations, and then not just randomly buy them, but watch them and see if they begin to behave in a way that fits your personal risk, strategy and personal, however you're trading your strategy itself. But like I said, that doesn't take away from the fact that a whole lot of people are going to be watching 240. So if the price can break that level, then it becomes rational to think that that could create another surge of buying pressure. So let's keep an eye on it and see how it plays out. Next one, CCL, and this thing has been just absolutely destroyed. However, it does now have a very, favorite pattern of mine, and it is a bullish pattern, but again, no guarantee. So just because there's a bullish pattern doesn't mean that the price is for sure going to go up. But this one has just been beat down so far, so fast that I wanted to get it mapped out here. So the bottom part of that pattern right there, the area of support. So let's actually change that to green to represent more so a bullish dynamic. And then the resistance portion of it is right there. and this would be known as a falling wedge. Now, you might think a falling wedge would be bearish, but no, actually a rising wedge is bearish, but this is a falling wedge pattern. So if you like to play falling wedges, if you like to play, this price range down below $10, then I would definitely say to get this one on your watch list, because it's a beautiful setup here, and whether or not it gets follow through, only time will tell, but worth at least keeping an eye on. Next one, AUVI, absolutely beautiful move here. To set up a little context, there was this trend line here going into the day, but you can see the price is now broken above there. And then this is just based on a foundation rule in charting, which states when levels of resistance are broken and closed above, you want to see them act as support. And so far, so good. That is exactly what's happened here. You can see the price is pulled back and found some support right at that area. So moving forward, $3.50 is going to be that ideal level of support. Meaning, if you're asked, Clay, what's going to make this chart look the absolute best moving forward? And that would be if the price can stay above $3.50. Now, if the price falls below it, does not mean that the entire chart's destroyed, but if the price can stay above it, that would certainly be the best sign of power moving forward. From an overarching standpoint, just keep an eye on that 50 period moving average purple line there, as it's been upsloping, and you can see already a couple of beautiful examples of the price bouncing off of it. So yes, again, 350 would be that ideal level, but if the price doesn't hold above it, you still do have that 50 period moving average. In terms of areas of resistance moving forward, nothing fancy or complicated here, just the question of essentially where did the party stop today, and that was right up there at that $4 mark. So nice round number of $4. So keep an eye on that. But overall, very nice breakout of that trend line. Not just a question of can more momentum show up for Wednesday. Let's see what happens. Next one here, TSLA Tesla, and I promise I'm not trying to pat myself on the back, but I am trying to pat charts on the back, and I suppose give a quick plug to get signed up for that free class that I talked about, because what I mapped out yesterday, and this will mean a bit more to those of you that watch that video, but I mean, again, the power of charts. You just can't make this stuff up. So let me get rid of these lines here, because the main levels I want to focus on are these red lines. But I talked about this red line here being a key area of resistance, and you can see right there, broke above it, made a great move, and then look right where the move got rejected, at that secondary red line up there, resistance before getting pushed back down. Again, that is just the power of charts. Amazing how that stuff can work out. Now, I'm not implying charts are perfect. Nothing is perfect. But are they a tool worth learning and having in your trader tool belt? Yeah, absolutely, in my opinion. So yeah, get signed up for that free class. Anyways, let's get some things updated here. So first key level that everybody's going to be watching is that 680 mark. I mean, you basically now have people wondering, okay, is this some sort of double top here before this thing rolls back over? And, maybe. But you're also going to have a bunch of people saying, well, if the price can get up there and push up through 680, that could definitely spur on quite a bit of momentum and get it back above 700, that is, to which I would agree. But so keep an eye on 680 as definitely a very important level of resistance as far as levels of support are concerned. Key level that at least I'll personally be watching very closely right down there at the 653 mark. And then if 653 doesn't quite hold up, next key level, then down there right around what was that? The 645 mark. So 653, 645, two key levels of support. But in my opinion, at least, I think the most interesting dynamic is that 680 mark. Whether or not it comes into play, obviously, we'll have to wait to Wednesday to see. But those are going to be the key levels that I'll be watching on Wednesday. So that wraps up the top 10. And again, like I said earlier, if you want to get signed up for this free class and learn more about this tool and how it should be used, then I'm offering the free class later on this week, Thursday, June 16th at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy this format, if you would like for me to continue to take out the required time and effort to put this content out, please help me out with two easy things. Hit the like button, leave a simple comment, say hi, tell me what you traded today. But those two things communicate to me that you are enjoying these videos. And as long as I know people are enjoying, I will continue to create this content. So again, get signed up for the free class, hit that like button, leave a simple comment. Everybody take care. Have a good one.